My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, everybody. Today, our special guest zooming in from Virginia. Very, very smart guy. In fact, I think Flint Jamison is probably the first aerospace engineer turned real estate investor that I've interviewed in over 1,200 interviews. And he's done quite a few different things. He's, invested in multifamily, build to rent developments. And these days he's focusing a little bit more on medical office buildings. But he's not really stuck to any one particular asset class. We'll talk about that. So Flint, welcome to the show. Great to have you.
Yeah, thanks for having me.
So Flint, give us a little snapshot. As we're recording this, we're the middle of the year, 2025. What does your current portfolio look like today?
I think you covered it. I've got lots of multifamily. Some of them are single investment portfolio opportunities. Actually, two of them are call them fund of funds. So investors get into a portfolio of three assets with a single investment. I have 5 built to rent developments. Now we're building a portfolio of medical office buildings. So we just closed on that one like 3 weeks ago, $11 million raise. We're buying 13 dentist offices, and we'll cash flow those for a while. Then we'll sell to a REIT for big gains in 3 to 5 years. And then, like I said, I'm asset agnostic, so my investors can benefit from diversification around the country and different assets, different sponsors.
Yeah.
So looking into debt funds now as well, and then hopefully in the future, maybe some self-storage, maybe some industrial. But tell you what, I'm super hooked on triple net leases. And
I can see why.
I'm really looking to cash flowing deals because built to rent developments are not cash flowing. Some of the mid 22, 23 investment multifamily, just like everyone else, withholding distributions. So really trying to give my investors some cash flow, and that's where triple net's really good. And
well, I guess that's kind of an advantage of having a fund model as well, because if one particular asset's not doing that well, you can get into another one and kind of boost the whole portfolio a bit. Am I understanding?
No, yeah, that would be a blind fund, and I don't. Although that's an interesting idea, to give an analogy for the listeners, that's like building my own mutual fund where I just start bringing things into the fund and people are just along for the ride. I do more of a customizable fund where the investors get to choose their own adventure. So I just offer up deals. If they want in, they can invest into it directly or wait for the next one.
So it sounds like are you involved a lot in the day-to-day operations of these properties, or are you more on the co-GP side of things, raising capital side of things? What is that?
Yeah, so the answer is both. When I do the fund-to-fund model, fund-to-funds go in explicitly as LPs. So all I'm doing, I wear the hat as an LP when we invest. I collect people's money and we get beneficial returns. And I act as investor relations to my investors. But so in that scenario, no, I'm not involved in the day-to-day. I am close to the operators, though. On other assets, I am a co-sponsor, and per the SEC guidelines, I have to play more of a role than just investor relations. So it varies. You can turn that dial up and down, but some of the properties I am on weekly asset management calls and going to properties and playing asset manager sometimes. So
Got it.
yeah.
Interesting. So you come from a background of engineering. Most engineers that I've met are not super comfortable being people and raising capital and that kind of stuff. So that's a little bit different. Tell me how you came across that and kind of developed the passion for it.
I guess there's 2 answers to that. One, being a people person, I very quickly became an engineering leader and was leading groups of people. Then I was actually, last job, I was a program manager overseeing really large $120 million modification program and 50 direct employees. So
Oh, yeah.
I'm used to getting up and talking to people. Um, on the flip side, now doing what I'm doing now is literally sales and marketing.
Mhm.
That I think is the biggest leap from my engineering world, and I still struggle daily on sales and marketing. Like I'm not good at just getting on the phone, and I don't cold call. For one, I don't do that. But even for the investors that I do have and I do know and I have a relationship with, I'm not very good at getting on the phone and calling them. Maybe it's just
I don't like doing that either, man. Yeah.
yeah.
My own family, for crying out loud, I'm crappy at calling
Right.
people.
Yeah, yeah, there's that too. So yeah, it's a bit of a quandary, and I just try to do things differently and
Well,
be
that's
on
well, that's
LinkedIn a
cool.
lot.
Yeah. So what do you do? LinkedIn?
LinkedIn is kind of my number one. And
Yeah.
actually, this is kind of fun. I haven't announced this. Maybe this is my first public
Eh,
announcement. I'm about ready to launch my book, The Engineer's Guide to Real Estate Wealth. So
That's
it's kind of like
awesome.
a how to invest in syndications, and more of taking the language of an engineer, and
Translating into real estate speak,
yeah,
right?
and I'm just very
Yeah.
targeting engineers. Here's a
Nice.
book written by an engineer for engineers.
Beautiful. Congratulations. That's a big step.
Yeah, thanks.
Yeah, fantastic. So, speaking about the whole capital raising side of things, seeing that you're not a big fan of cold calling and picking up the phone, as most people aren't, but some people are pretty good at it. What
Yeah.
do you do instead? What have you found to be most effective for you, Flint?
Uh, eh, to be honest, it's really people connect with me via LinkedIn.
Yeah.
I post, they like it, they end up connecting, and then that's how they'll schedule a call. And at that point, we develop that relationship. We do eventually get on the phone,
Yeah.
but a lot of it is more organic inbound. It's not me putting out videos of myself. It's not ads on Facebook. It's truly just more organic. And then when I have an opportunity that goes out, I will get on the phone with um, the investors that I do have a more relationship with. Right, my
Mhm.
CRM is it's long. I'm not going to call 1,000 people just to hope
Yeah.
to, because that's I would quit.
That's inefficient. Yeah. Painful.
Yeah.
And
So
yeah.
yeah, and text messaging. So I've got all of the automations and stuff that'll ping people.
Cool. 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 All right. So you mentioned that you've done a whole variety of different things. You know what it's like in the multifamily space. You know what it's like in the development space. There's pros and cons to everything. These days, you're more in the medical office space. So for
Yeah.
folks that aren't familiar with that, you mentioned triple net, and that's why you like it. So maybe unwrap that a little bit more for us.
Yeah. So triple net is classic for commercial real estate space that is like your medical office, your just business office, industrial.
Hmm.
And these are triple net is essentially you
Even
have
like restaurants and stores and stuff
yeah,
quite
yeah,
often.
you and retail. So it's to think of it, it's not a tenant that's your it's not a residential tenant or like self-storage. You have individual people. These are businesses that are renting, and that's where you get triple net. So they pay not only insurance, they pay taxes, and they pay for the maintenance. Now there's a line that gets drawn at some point on the maintenance, but so for instance, on medical space, the tenant has to do with their whole build out. That cost is on them. If the toilet's clogged, it's on them. So in the world of being a landlord of a medical office, we don't have to answer the phone at 3 a.m. in the morning because
Mm.
it's their responsibility to handle it. A lot of times, especially medical office, even the HVAC, their HVAC systems are specific to their need,
Mm.
and the landlord doesn't have a say in that, so they own it. If their furnace goes out, that's on them. So it's kind of a really uh, nice play for a landlord to own triple net because you
Especially
have
after you've been the guy answering those 3 a.m. phone calls.
yeah, and yeah, there's so much less work now
Mm.
up front. I would say similarly to you make money on the buy. I think on a triple net, you make money on the correct triple net lease, and there's
Mm.
no good standard. But I partnered with a guy who's an expert at triple net leases, especially in these medical and dental office space. But
Yeah.
if you put the wrong triple net lease together, you can lose money. If you put it together correctly, you will make money, because that's where you draw the line on who's responsible for what: the parking lot, the siding, the roofing,
Right.
HVAC, all that. It's tailored per building. So, but yeah, I mean, once you're set, it's a 10 to 15 year lease. They can be very long, so you don't have turnover. And a lot of these tenants, it takes a lot to move a dentist's office, so you're
Yeah.
likely not going to have a
Yeah, because their
dentist.
clientele is from close by. It's a horrendous pain in the butt to
They're super
move all the
sticky.
equipment and yeah.
Yeah.
And
So,
they're
I mean,
successful businesses, right? I mean, they're going to be there
yeah,
for the long term. Very, very
yeah.
cool.
I call it my most stable cash flowing asset.
I can see why.
Yeah.
Yeah. So, it can't all be sunshine and flowers 24/7 with these kind of properties. What are some of the downsides?
Yeah. So we have the hit by a bus scenario. Like, you have a single building with a single tenant.
Hmm.
That dentist gets hit by a bus, they quit, they retire. Um, it's going to be harder to replace that tenant. It's not
Hmm.
a quick 2 week turn.
If it goes vacant, it can be vacant for a long time potentially.
Yeah,
Hmm.
yeah. And if you talk more broadly beyond the dental office, if you're talking like retail space where you have the laundromat and the karate place and
Like a strip mall
uh,
type thing.
yeah, strip mall, open air shopping, it gets challenging. I mean, the one that's actually right by me has had a very large space open for 2 years.
Yeah.
They're missing out on that. What's interesting in our scenario is, yeah, if the dentist moves on, our primary operator used to run dentist offices. Like, dentists would hire him to run their business because, newsflash, dentists aren't always great business operators. They just
Yeah.
want to do their practice. So he built a company that made 100 million NOI a year, sold to private equity. So he was running just this massive portfolio of dentist offices.
Yeah.
He understands the business inherently, and when he does due diligence, about 75% of the due diligence is making sure that the dentist is running a good solid business. They're going to be able to pay the rent, and in the scenario that something goes sideways, he has the capability to get in there and keep that business running. He can bring in, I think it's called a per diem dentist. So it's a very unique situation that provides more stability than, say, the laundromat moves out and now you got to just sit and wait for another tenant because you're not going to operate a laundromat yourself. Where in this scenario, the operator has that ability to keep the clients coming in, keep the employees employed until he can find a permanent dentist to take over the practice.
Yeah. No, that's good. So it sounds like you're really focused on that niche in medical offices, primarily focusing on dental offices, because that's
Yep.
what your partner's specialty is. Sounded to me a little bit like your focus when it comes to raising capital is connecting with engineers, because
Yep.
that's what your background is. That's what the new book's all about. So yeah, it sounds like you're very, very focused.
Yeah. Until I go find the next deal, like the debt fund. I'm looking into a debt fund now. So for anyone, I don't know when this podcast is coming out, just another cash flowing opportunity. So we closed up that dentist office fund. We're actually going to open one later this year and do another 20 million round and buy more properties. But in the meantime, I'm trying to bring more diversification to the investors for other cash flowing opportunities. So yeah, I kind of jump around looking for things, but it is all about, all right, which debt fund am I going to do? Getting in on the due diligence on that. Is this the right deal? Do I feel safe with this operator? Do I feel comfortable bringing it to my investors? And then,
Yeah, that's the thing, isn't it?
yeah.
Oh, that's exciting stuff, Flint. Well, I'm sure a lot of people listening or watching this are going to be curious and perhaps want to reach out and connect with you. If they do, what's the best way for them to do that?
Yeah. So my company is called Vestas Capital. And the easiest way to find me is just go to investwithflint.com. It'll take you right to my website, Vestas Capital.
Perfect. Well, Flint, thanks so much for being on the show. That's fun. love what you're up to with the focus. Congratulations on the new book. Very, very interesting about this medical office triple net thing, especially focusing on the dentist. Obviously, you're onto something interesting there. So thanks for sharing your time today.
Yeah, thanks for having me.
All right, everybody. Thanks for tuning in, and we'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.